It seems like to me that when there's bad news, interest rates spike up.
Hey there, everyone. Jamie with Sell for 1% Realtors, joined as usual by the gang, head broker Dave Barlow,
How to do?
Jaysen Barlow, and Rich Cercone at Equitable Mortgage, here to talk about the recent Fed meeting and what it means for all you home buyers and sellers out there in the market. Rich, what did we hear from Jay Powell yesterday?
Well, Chairman Powell spoke yesterday. The Fed, if the folks haven't heard, left interest rates unchanged yesterday. However, as we've said in many of our previous videos, they were very dovish in their comments towards interest rates. So they led the markets to presume and to believe that we will see a rate cut in September, and the markets are anticipating future rate cuts in 2025. So all of that is leading to a softening of interest rates. The 10-year Treasury yield, which the mortgage rates loosely are tied to, was almost 4.6% back, I don't know, maybe 2 months ago or so. It's this morning, as I look at it, 3.97%. So we've crossed under the 4% range on the 10-year Treasury yield. So all that great news for people on interest rates. If you bought a house last year in the high sevens, you probably should start thinking about refinancing. And additionally, rates here are looking more towards the mid sixes, the 6.75 type average rate, as opposed to high sixes. We're not seeing a major move down in interest rates. We're not seeing the sky open up in 5% rates, but we are seeing rates start to modulate just a little bit, which is great news.
So what is the FHA rate right now? It's got to be in the high fives.
Dave, I haven't looked at that rate since yesterday's meeting. Yeah, so I'm a miss here, but I would think you're right. It's very low sixes or high fives at this point.
Yeah, because last week we were high sixes on the conventional and low sixes on the FHA.
Right.
If we're in the 6.5% range, it would maybe indicate that high fives or thereabouts. But as we talked about, you also have the PMI insurance. But if the 10-year Treasury bond, and I'm just doing math in my head, goes from 4.6 to 3.9, that's well over a half point reduction. That it would seem like mortgage rates should kind of follow that down. Maybe not as drastic, in a one day, but maybe float down over the next week or so.
And, that was one of the things I wanted to say. So it's a perfect segue, Dave. What I am seeing street level, okay, this is not like, major announcements from the Fed. It's just a humble guy in Columbus, Ohio, writing mortgages for people every day. I am not seeing rates make a move down like, I've been in the business 28 years. What I've seen in the past, I'm seeing a much more measured approach towards these rates coming down, as opposed to previous cycles like this that we've been through. And I could, not to be political, we don't want to be political here, but there is a lot of manipulation of everything in our society these days. The news cycle was very manipulated. The markets are, I think, somewhat manipulated. They always put, a pretty face on it, or whatever face they want to put on it. And I think these rates are being somewhat manipulated by Fannie and Freddie, who are owned by the government, because they don't really want these rates to crash down. They like people holding on to their 7% rate to kind of counterbalance the people that are at 2 and 3%. So you get that mix. If we get all those sevens into the fives, and then you've got a bunch of twos down here, you've got quite a bit of a different mix of what the investors are looking for on these mortgage-backed securities. So I think that's playing into it a little bit. But just again, street level, I'm not seeing the move that I would have anticipated seeing with the news that we had yesterday. A little bit, but not as much as I would have anticipated.
Well, I think what I've seen that's maybe a little counter to, and along the line of what you're talking about, but counter to what we've seen in years previous, it seems like to me that when there's bad news, interest rates spike up and then they kind of float back down over, a month, 6-month period or 6-week period of time. And then we have bad news and they spike back up and, then they float back down. Am I right in seeing that kind of trend?
Well, I think that they're much more prone to raise rates more quickly than they are to lower rates.
Yeah.
So any kind of news that is bad news for interest rates, but might be good news for the economy, like a strong GDP number or low unemployment, all those things tend to make rates go up much more quickly than the bad news, meaning like a lower GDP or worsening employment. It seems like it's a more gradual downward trend. And I, again, being in a business a long time, I've noticed it's much more gradual in the last year and a half or so than what I've seen in previous situations. Like when we had that March 20th, 2020 date and the whole COVID thing blew up. I mean, rates dropped on mortgage, real rates on mortgages dropped almost 0.75% overnight, just like that. And we're not seeing anything like that right now. We're seeing very measured lowering of rates.
All right, Rich. Well, I appreciate the information. Jay to Bomb, Jamie, you guys have anything that you'd like to interject here? I know Jay does. He always does.
Jamie, you can go first if you got anything, buddy.
I'm waiting to hear from you.
We're waiting with bated breath here.
Oh boy.
Be ready.
I made that too good. I like Rich's conspiracy theory. My conspiracy theory is a little more, I guess, simplified, which would be that, and I do think it has to do somewhat with politics, but just in general, I mean, the whole system is built on confidence. The only thing that I think is weird is now you're seeing a lot more headlines that are negative, and, we haven't been seeing that, up until now. I feel like it's been, the news has been saying, it's going to be a soft landing and things are good. And now the headlines are, major price corrections in real estate. I mean, I'm not seeing that on the ground. So it's like, all of a sudden I'm usually the negative one. And it's like, everything that, we're dealing with, showings are up, sales are equal to last year, prices are up. So, it takes a little more skill and a little more tact to get things sold. But, I just totally lose my train of thought, so we can just wrap it up. That's fine. Go ahead, Jamie. Just take it home.
Yeah, I mean, I think it takes a little more skill, a little more tact, as Jay is saying, to get things sold, but numbers are still great on our end. So if you guys have any questions about mortgages, interest rates, give Rich a call. His number's here on the screen. And if you guys are looking to buy or sell property here in and around Columbus, anywhere from Jackson, Ohio to Cincinnati, Cleveland, give us a call. Our number is on the screen as well. Thanks, Rich, for joining us.
Thank you for having me, guys.